business advisors are not necessarily accountants themselves. And as they are building and working with the entrepreneurs, how should they actually be looking at things? And to me, financial statements or in business, finance is about 4 things. And I'm going to draw a line on those 4 things. And since the entrepreneur makes decisions every day, he has to use the financial statement to make decisions. And those decisions should be around these 4 things. So we have something that looks like this, which is basically 4 things. Number 1, we look at income. Income is the sales, is interest, is dividends, is professional fees that we actually generate in a business. And number 2, we spend the money, which is your expenses. Number 3 is the assets, which is what we own. And we have a debt, which is, the accountants will call it liabilities, which is what you owe to other people. So no matter whether the business is a listed company in Hong Kong, New York, or you have a spaza shop in Soweto or somewhere in Polokwane, you have a side hustle. The only thing that you deal with in finance is these 4 things. Don't worry about everything else, just these 4 things. And the best way of approaching this is to say, when I am looking at finances, this side, I am managing performance. And this side, I am managing position. Because when I say income, less expenses, I get whether I'm having a profit or loss. And when I say asset, less debt, I then have the net worth, which is the value now of the business. So the net worth of the business, as I say, is the value, is highly affected by the profitability of the business. If you keep on making losses, the net worth automatically reduces the value of that business. Obviously, the accountants are going to call it shareholders' equity. In other instances, they will say return income. That you don't care about that, because that relates to standards that are, I think there's more than 300 some odd standards and guides on that. Don't worry about that. What about these 4 things? Keeping my income. How much money am I making? And in that me making, what's my top best sellers in that income? Number 2, how much am I spending? Am I making a profit or loss? Assets, how much assets am I owning? And how much debt? How much do I owe other people? Pay attention though in the next 2 points. You need to make sure that everything that is above this line is kept high at all times. But everything that is below this line is kept low at all times. Guys, that's your financial statement. You are guaranteed, if you're always going to try to make sure that your profit is right, you're guaranteed if you do these 2 things. Keep everything that is above the line up and keep everything below the line low. And you build this for the entrepreneurs, business advisors, and you help them to consistently be looking and measuring this as they're running their business on day-to-day. And as they build up on this, you then can build up more information. For example, you start saying to them, okay, you now have your best sellers here on your income. Tell me something, in those areas on your income, should you be increasing the price or should you be increasing the quantity, which is the volume, right? Because that is how you're gonna actually increase your income. Or should you be diversifying? Again, you then help them to say, in here, this income, how does it relate to your asset? Are your assets producing the income? Because if you have an asset and it's not producing income, That's an idle asset. You actually should be disposing that asset. Also, the income that you have generated, how much have you spent to actually generate it? Now we're talking about matching principle, because the income that you are generating should also be matching with the cost and expenses. I have seen entrepreneurs, the income is not talking to the expenses because we're not doing matching. When you're not doing matching, there's a chance that you are underpricing your customers because you have not accounted for all your costs. Also, you need to ask yourself, that expenditure, how is it being financed? Is it financed by external people, which is in this case, maybe would be your suppliers, or is it your bank with an overdraft, or is it your owner's equity, your shareholders loan account? And that debt also should be financing the asset. So I hope I should have used a different color with this cycle. But I hope you understand, because I was explaining it as
we are indeed. So Nomvuyo, Ngoni, even our financier in the room, Kita, they're commenting, they're saying, thank you very much. At last, someone explains financing for us in a way that we can easily use for our clients, Precious. So I think the last 5 minutes that you explained this is really setting us apart. I wanted to ask Nomvuyo if she wanted to come into and just explain what it is that she likes about this. Would you like to do that, Nomvuyo? Because we can bring you into the room to do so. Let's do this so quickly so we can make it real. So we can just ask you to talk, Nomvuyo. What is it that you like?
Yeah. Oh, thank you, Precious. This makes it so easy. Wow. It is really, really easy. I just like the fact, firstly, you just focus on the 4 things, and then you just play around the relationships with around the 4 things, and everything relates to the next, to the next. So it's going to be easy for us to explain to our coaches and mentees, and it's going to be easy for them to understand. You have just demystified accounting. Thank you very much. And it's so practical, you know. There are certain things that you must make sure they are all high. There are certain things that you must make sure they are kept low, and how they relate to each other. Thank you very much.
So Precious, practically speaking, if we use this framework with our clients, would you relate it back to financial statements and find some ratio or some figure that they can use as a benchmark for those up and down arrows? You know, what should you be pushing up, what should you be pushing down, and which are those?
Yes. So business advisors, this is financial statements. These 4 things are financial statements. And this is what the accountants call, oh, I have an eraser la. Yo, what have I done? Okay, let me try this. So this side is income statement. This side is a balance sheet. The movement between income statement and the balance sheet is a cash flow. So this is all you'll ever need in terms of financial statements. The movement, obvious, because here they are also accountants, they're gonna say, no, Precious, you're missing cash flow. No, I'm not missing the cash flow, because the cash flow is just a movement between this side, which is performance, and this side, which is position. That's it. What you need to focus on, once you have the client understand what this is and how to manage it, you then maybe you will say, the following month, let's now analyze each of these components. Let's start looking at income. This month, we're analyzing the income. Where is your most money coming from? How much effort, how much time are you dedicating on that? You now are trying to help the entrepreneur to prioritize